Hadar here with Homes by Hadar. Junko's not able to join us today because she's out on a closing. We're in this beautiful home here in Equestrian Club, and I have with me today a special guest, Samantha Outlaw with Reach Home Loans. And Samantha is here to help me because I've been getting a lot of questions from my clients, concern that we're in for another big drop in the market like we saw in 2008 as a result of the forbearances that people have been taking advantage of. Samantha, what do you see? What's your opinion about what's coming down the pipe?
Sure. So we're getting the same questions. There's a fear that there's going to be a mass wave of foreclosures because so many people lost their jobs or they were furloughed, so they elected the forbearance option, which is great. And if you have that open line of communication with your lender, they're going to grant it to you as long as you are on time with your payments to begin with. But the fear of this, big reckoning that's coming due to the forbearances and the pandemic, we just don't see that happening. There are a lot of people who have equity in their homes, and that's the big difference from what happened in the past. Yeah. Nobody could come out from under themselves. They were underwater, they sold, and they still owed money back to their lender from what they needed to pay back during that forbearance period. So right now what we're seeing, some lenders are giving the option to tack it onto the end of your loan. So it's almost like a silent second lien. It doesn't negatively affect you in any way, and you only owe that money back when you sell or when you refinance. So you go back to your normally scheduled payments as soon as you opt out and go back into paying your mortgage. We've also seen that people can refinance it and then modify the loan. So
and interest rates are so low.
Exactly. So they can take advantage of the low interest rates. You make 3 on-time payments, you can refinance, and then it should balance back out. So when you do modify the loan and your monthly payments increase, it balances it back out. So you have the option now where, again, before they were so underwater, they didn't have that equity, so there's no inventory.
So the loans were gotten honestly this time around.
Exactly.
People had equity, they put money down, they had income to support the loan that they were getting, so they're more likely to be able to continue paying. And yeah, I mean, from what I've heard, we're at a 48% low in inventory, so homes are flying off the shelves at still not the prices that we would have been in 2008, but at very high prices. So people have that equity.
Exactly. So it's a good time to take advantage of that. And if you do really feel like it's overwhelming and that the payments that you owe now are too much, you can sell. You can pay the money back to the lender and then maybe get yourself into a home that's more affordable. So call her.
Great option. Yes. So I really appreciate that because I think that's giving hope to a lot of people. And none of us want to see a correction like we saw in 2008. And I think the banks did what they need to do to make sure that we avoid that. So.
Absolutely.
All right. Well, thank you, Samantha.
Yeah, thank you for having me.
And keep the questions coming. And we'll maybe bring Samantha back so we can get some more dialogue. Anytime you guys have questions, if I'm not able to answer it, I'll get an expert in so we can make sure that we address what your needs are. And again, if you're looking to buy or you're looking to finance a property, give us a call.
Thank you.
Thank you.
Thanks, everyone.